One of the companies at the center of the SVB collapse is Tomo Credit. For more on how they've been impacted, let's welcome in Yahoo Finance's Allie Garfinkle. Allie, so give us the skinny.
So, give us the skinny?
Yeah.
I don't know. I'm trying to remember the last time someone said that to me.
Oh, am I aging myself? I hope not.
So, Tomo Credit, right?
Yes.
They're a fintech startup that's helping consumers who have less financial access build credit. And they've gotten a lot of buzz in Silicon Valley. They've raised about $130 million in funding to date. Mm-hmm. And they were intertwined with SVB at the time it collapsed. They actually have a $100 million warehouse facility with SVB that still is entwined with the bank. Now, I spoke to their co-founder, actually, CEO and co-founder, Kristi Kim, and I was trying to understand how it had affected Tomo. But what was interesting is that two bigger themes really emerged. The first was that her case is that fintech is more important than ever. Fintech has, for instance, part of the ethos of fintech, right, is that the system isn't perfect as it is and can be improved. So that I think we have seen in full color. I don't know if I need to say any more on that.
Something's being disrupted.
Something's being disrupted, right? That's definitely true. But it's the case that she was making is that fintech, because of the ethos of it, because it is so devoted to the idea that we can do banking better, that's really where fintech can improve. And that made a lot of sense to me as a theory. The other thing, too, that was maybe the more salient point she mentioned, which was that the barrier to entry for fintech is actually going to be higher after the collapse of SVB. Now, why? As it turns out, SVB was an early key partner to a lot of these fintechs. A lot of them have business models that have never been tried, and SVB was particularly willing to try those business models out, do the due diligence, do extra due diligence, and try to figure out if they could really back these companies. So the banks this bank collapse is really going to leave a huge gap in that space. I'd actually love to read you a quote from Kristi because I thought it really distilled the situation down. For an early stage company that's about to launch, it's going to be hard. For instance, if I were to launch Tomo Credit this year, I'd be absolutely screwed. There's just nowhere to go. It's interesting because that support meant so much to me then. From a selfish perspective now, it can actually be a competitive advantage for Tomo because it's wiped out opportunities for a copycat to come out this year or next. So what she posited to me was fundamentally this catch-22, where clearly the ways fintech is looking to reinvent the system are important, but that those startups that are trying to get into fintech now are going to have more trouble getting a leg up than they ever have.
Not only that, guess what? Interest rates are higher. Cost of capital is up. That's affecting all startups, 100% of them. So,
and VC funding.
Yeah, definitely adds to that. So you actually got a chance to attend Shoptalk this year. What was the main takeaway from Shoptalk?
That's right, Jared. There is one key takeaway here, and it's that the AI hype cycle is in full swing. At Shoptalk 2023 this week, AI was everywhere, whether it was on panels, on the record interviews, or back green room conversations. But WonderCo co-founder and Hollywood legend Jeffrey Katzenberg had an unexpected take. I was joined by him and Natomi CEO and founder Puneet Mehta to break down how they're thinking about AI and where tech is at right now. Take a listen.
I think, like so many people, we look at the opportunities around AI and are genuinely excited about it. I think you're hearing from many of the grand wizards of our world, the Bill Gates, the people who have really been the pioneers in the last generation. I think everybody agrees that this actually may be the next defining moment in sort of our tech evolution, if you will. And with that comes incredible promise. Today, I think the enthusiasm that we're hearing, unbridled enthusiasm, is about generative AI and all of its applications around creativity and storytelling and art, and it really is quite spectacular. That's not what I'm interested in.
There's a particular kind of AI that you are a proponent of, Puneet, sanctioned AI. What does that mean?
So what sanctioned AI means is that you get to leverage all the great things that generative AI brings to the table, but in a fail-safe environment. So you need a safety net around it. You need to be able to enable what role does the AI play? Is it autopilot, where it helps customers autonomously, or is it co-pilot, where it's helping an employee? You need brand safety filters. What are the things it is allowed to say, not allowed to say? You need it to follow business policy and procedure. You need to be able to audit the work that AI has done with relative ease. And then you need escalation procedures where if it does something wrong, how do you have somebody step in and save the moment gracefully? So there are all these things that would apply to employees. Now AI, as it enters your workforce, you have to look at it as an employee. To make it productive, you need all these measures. So sanctioned AI lets you use all the amazing capabilities of generative AI, but for the enterprise in a fail-safe mechanism.
The chaos in tech versus the chaos in Hollywood. You talk a lot about the parallels between the two, and especially at this moment, I'm curious about how you're thinking about those parallels.
Well, I think they're actually quite different. And what I would say on the tech side of it is if you look at 2010 to 2020, the impact of technology, digital technology across every facet of our lives has been beyond anything anybody could have thought of or imagined. From 2020 to 2030, I think the impact will be 10x what it's just been in this past decade, which we can't actually fathom. That's how gigantic. And so I don't see this as a troubled time for tech. I think it's a time of opportunity for it and why I'm so excited about it. On the Hollywood side of it, it is a transformational moment in time. And they are in the process of transitioning into a new relationship with their customers. And it's not, I think, crystal clear yet what that relationship is going to be. How important are movie theaters going to be to their customers? You know, what is the place for digital distribution? What is the windowing of content? How much of it? Where? How is it priced? All of those things, frankly, are being redefined in this moment in time. With that, some consolidation going on. And so I think the next 18 months is that time for it to reconfigure itself and have its next renaissance. I couldn't be more optimistic about the opportunities around content, content creation, content distribution in it. We're watching more television, more film, more video today than we ever have in our lives before in it, and that's not going away. If you are in business today, there are three things that remain essential for your health and happiness and continued prosperity. More, better, cheaper. Right? Those are the three things. Usually,
That all sounds pretty good.
Usually you're told you get to pick two, right?
But you think you can get three?
Yes, I think with AI and the proper deployment of AI, it is going to actually be an opportunity to do all three of those things.
We could look back at this moment, it might end up being the industrial revolution moment for tech, where AI ended up getting us to a place where there were new types of jobs created, there were new types of skill sets, the impact it's going to have on education, on healthcare. But yeah, we are most excited about how the enterprise is going to adopt it and really build that customer connection, that customer love.
That was Allie Garfinkle at Shoptalk 2023.